Hey guys, hello guys, welcome back to Echo FX. All right, so it's a new week and we are here for the weekly overview and the weekly analysis. All right, so hope we had an amazing and a pretty profitable week last week. Last week was actually very important in the markets because we were expecting a rate cut from the Fed. The Fed is actually the government of the bank, just like you say, the CBN, exactly something like that. So we had from the United States, the Fed, they actually cut interest rate by 50 basis points, which is about 0.5%. All right, from 5.5 to 5.0, and it caused a very let's say huge volatility in the market. We're going to check all that in the market or on the chat after we are done with our fundamental overview for the week. So before we go straight into what we have for the new week, if you're still watching or if you're watching here and you're yet to subscribe to the channel, I've been saying this over and over again. Come on, guys, support the channel, subscribe, click on the like button if you've been enjoying this analysis, so far, and also share with your friends. Put on the comment section also some amazing comments. All right, so let's just go straight into the overview. All right, so this week, like I've already said, the highlight of last week was the FOMC and the Fed interest rates, which is over here. You can see the Fed fund rate. The previous was actually 5.5. The forecast was to a 5.25, which is a reduction by 0.25 basis or 25 basis points, which is about 0.25%. But there was actually a reduction by 50 basis point, and we're going to see the impact of the market in a while. So let's just quickly go do like a run through for what we have for this new week. All right, so this week we're having some pretty red folder news. So on Monday, we're having manufacturing PMI from three major zones: the Eurozone, the GBP zone, and also the US zone. Then on Tuesday, we're having the cash rate from the Australian zone. Then we're having a speech from the Japanese zone, that's the Bank of Japan. The governor of the Bank of Japan will be having a speech. Then we have consumer confidence from the US zone on Tuesday later in the day. All right, so we also have a speech from the Bank of Canada Governor Macklem. All right, so he'll be speaking later in the evening, GMT plus one time zone. All right, so we also have CPI from the Australian zone on Wednesday. Then on Thursday, we have the Swiss franc, the CHF. They'll be having their monetary state policy statement or their the monetary rate statement, and they're looking to cut interest rate again by 25 basis points. So we are in a rate cut season. All right, we are in a rate cut season from all of the banks of developed nations or economies. Yes, we'll be having rate cut season, and what more or less is a good thing because inflation in these regions actually reducing. Yeah, so once inflation is coming down, the next line of action for the banks is to cut rates. Right? It's actually cut rates, and that is what the banks are doing. So we have GDP also and unemployment claims that Thursday. Then lastly on Friday we have GDP from the Canadian zone and core PCE from the US zone. Trust me, everyone be having their eyes on the core PCE because this is also one of the factors that the Federal Reserve use to measure inflation in the United States. So they'll be having their eyes on this to see how well inflation is still doing. If it's still more or less coming down and approaching the 2%, they have their eyes on ideally. All right, guys. So sorry about that. So let's just go straight into the chat. Okay. So as we always do, look at the dollar index first things first. So on the dollar index, what can we see? So if you've been following our analysis back to back, we've seen that we've been looking at this zone or this key level on the dollar index for weeks, and dollars just when it approached that level, that was in August, that's just been sitting trading within those two zones ever since then. Let me just mark that out quickly. All right, you can clearly see that it has been trading between these two zones, came down, came up, came down, came up, came down, and it's just in this region for the major part of last week. So with that rate cut, ideally we expect some further downside on the dollar, probably until Friday or maybe tomorrow. The flash manufacturing PMI could actually give a heads up or an overview of, maybe will give direction to this market. It could probably still come back up, but I know from what I'm actually looking at, we could see some further downside for the dollar to where exactly, to this region here. Yeah, so that's where I'll be expecting that the dollar retraces into. All right, so just have to be patient and see what happens. Right. So if there's a more or less like a break to the upside, then we could potentially see, once there's a bullish candle, right? A clear bullish candle above this region, this zone down here, then we could possibly see the dollar retracing or coming all the way back to this upside. But if not, if there's a break back into the zone, then we could potentially see the dollar index coming to retest this weekly support level here, down here. So with that being said, let's look at Euro USD. All right, so on the Euro USD, I've marked out my chart on Euro USD. It's pretty almost the same thing. Euro USD is actually at a critical level. All right, but you can clearly see that the trend is still clearly and strong to the upside, but it's actually on a critical level. So let's go to the daily time frame to potentially see what could happen. So I mean, if price is on a key level, what you should ideally do is to be patient to get a clear direction. And one way to do that is, now there are two ways. Price could come all the way up here, then give a bearish candle and sell off back down here. Possibly. All right. But dollar is not really strong yet. Right? Dollar is not really strong. So the more likely chance we'll see a further upside. So that would mean a break above, then a possible retest, quick retest, and it continues further upside. So if there's going to be a continuous further upside, where is the most likely level that the market could sell or buy into, which is this zone here? Yeah, that zone there. Well, it's not really far, but that could be like almost the same thing on the dollar index. So it's not really far away from what price is currently trading at. So potentially that is where we could see the euro trading into. Yeah, the euro trading into, but it's not really far away. So if there's a break to the upside, also we could see some further upside. But with the weakness in the dollar, I ideally expect further upside. So this is what you could do. If price should come here and you see a bearish close around this zone, you can take a sell all the way back down. You take a profit before then, but it could potentially come all the way back here. But if there's a break above, you'll actually just take an instant buy also once you see a break and a close above this zone. So potentially somewhere around the 1.12 level. Yeah, 1.12. If price should trade and break and close above that level, then could potentially take a buy trade all the way to this level. It's not really far, but you could actually make something quick from that level. All right, so let's look at GBPUSD. All right, GBPUSD is also almost doing the same thing like Euro USD, but GBP is actually very strong because they actually had their interest rate last week also, and it came out the same, which has been giving a lot of strength to the pound. You can see how pound has just broken above, created a new high in a very long time. This is not an all-time high, but it's actually a new high in a very long time. The last time it got to that level was in that was in 2022, 2 years back then. So now it has gotten there again, and the potential is still very strong. That's the bullish potential. You can see how strong it is. So I've marked out my chart also, and ideally I'll be expecting further upside until the market trades into the zone. So how can you get in ideally? What is the best possible way to get into this market? So you can see there's a range over here. All right, let's just quickly mark out the range. You can see like there's a tight consolidation somewhere around here. So if there's a break above the consolidation, you can just take an instant buy with your stop loss below the consolidation and you take profits around the zone. The reason why I plotted out that zone was because of that was a daily level, a daily key level. Now you can see this level over here. Let me still extend it. Yeah, so you can see how price responded at the level here, 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 broke below it, retested it here, and possibly could get to that level again. All right, could get to that level again. So potentially that's what I'll be looking out for GBPUSD for not the whole full week, but till Wednesday. So that break could happen even on Monday, which is the first trading day. I could get here on Monday and possibly still break above it and keep trading higher. So, but ideally, this is a setup. Break above, you can take a buy, your stop loss below the consolidation, take profit around the zone or slightly above the zone. But if it breaks below, the only reason I'll take a sell if price trades below this zone. What I ideally mean is if price trades all the way down here. So once I see a break and close around the zone, right, then I can potentially take my I can start looking for selling opportunities. All right, I can start looking for selling opportunities, but until then I would still be looking for more buying opportunities. So let's look at USD JPY. Yes, USD JPY. So USD JPY. Now the thing about JPY is they have actually brought a pause to their interest rate. They are still looking at hiking it, but on Friday they decided there was no hike. They left it same. All right, they left the interest rate the same and actually gave a negative sentiment to the Japanese yen. The euro, all right, or the let's say the euro now, or let's say the dollar that is ideally weak, all right, is very weak. If you check other instruments paired with the dollar, you see that they are actually strong against the dollar. But the JPY, the dollar is actually strong against the JPY. So you can clearly see that the JPY is actually weak. All right, so and I still see that weakness continuing further on. So how can we jump into this trade? How can we take an opportunity? So it's actually a very tricky one because price is currently trading at a key level. Well, it has kind of broken above it, but it's still very close to that level. So what we can ideally expect is almost the same kind of setup with GBPUSD. So what can we do? This is more or less like a tight consolidation also. So a break above this tight consolidation level. Yeah. So a break above it, then you can take your buy stop loss below the consolidation, take profit points just anywhere above. Yeah, because I mean the way I look at the markets from zone to zone. All right, or you can ideally just take your profit around this level here. Yeah, there's a key level somewhere around here. So just before the zone, you can actually take a profit, and that's actually a lot of pips. If you ask me, that's about over 200 pips. That's actually good, some good profits that you can get from there. So that's how to take advantage of the buys. But if the dollar's weakness continues and probably the Japanese yen get a little bit of strength, then we could possibly see a break below. So you want to take a sell. This is what I would ideally expect or want you to do. So you want to see price trade back into the zone, then give a possible a little maybe a retracement, and then you can take your sales for the down. Yeah. So that was ideally what the kind of setup I'll be looking at for USDJPY. All right, so let's look at gold, the almighty gold, gold. So gold has actually been trading at an all-time high. All right, that's trading at an all-time high. So this is the highest point gold has ever gotten to. So it has just been pulling up and up and up and up and up. All right, so if you well, how can we take advantage of this market about now? So what how can we ideally take advantage? So what I would ideally expect is if you want to just take a buy, it may be kind of too risky, and you know how volatile gold is. So you may potentially just want to wait for another retracement, something like this kind of setup. Now you can see that gold pulled all the way to the upside, created a little retracement and a further upside. So you may just want to wait for that kind of retracement to somewhere around this level here. So when you see a price trading at an all-time high, what you can potentially do is just wait for a scale down to a lower time frame to look for possible retracement points. All right, so these are the two levels I'm looking to buy from. So this is a demand zone because price actually took off from here to the upside, and this is actually more or less like a potential support level because price user level to sell, struggled around here before it broke above it. So let's look at it on the 1 hour time frame. So potentially on the 1 hour time frame, we could just potentially wait for gold to retrace back into this level, then possibly look for buying opportunities and actually keep buying. So gold could get to 2650, could possibly even get to 27. I mean, who knows? It got to 25, got to 26, potentially could be heading to 27, $2,700 per ounce, and that's actually massive. So that's ideally what I'm looking out for gold, just more or less or more buys than sells. All right. So with that being said, let's look at US 100, and that'll be the last instrument to be looking at for this weekly overview. All right. So for US 100, now one thing I've ideally um noticed is most times US 100 uses the moving average for more or less uses the 21 and 50 period moving average for its support. All right, when the market is trending, and clearly you can see that the market is trending to the upside. Clearly you can see on the daily time frame, you can clearly see that um the trend is still clearly to the upside, and there is a lot of bullish momentum presently, and that definitely is going to continue. So when you watch the video, what I want you to do is just ideally buy US 100. Just place a buy. That's all. Just place a buy on US 100. Where would I, if you asking where will I put my stop loss, where would I put my stop loss? You can just put your stop loss below. Either you can a conservative stop loss would be just below this region here. Which region is that? You go to daily time frame, you see like a support. So let me give a price point to it. All right, let me give a price point to it. So just below this resistance point, that should be somewhere around 196, let's say 630. Yes, 19630. So you could just check the price on your charts and put your stop loss around that level. So for an aggressive stop loss, if you want to use an aggressive stop loss just below this 50 period moving average, somewhere around here, you can just put your stop loss here and just keep buying US 100 all the way to the upside. All right. So that will be all for the weekly analysis. I really hope you are able to make good money from this analysis. And yeah, all of those if you make money, just put it down in the comment section. Ideally, just put it down in the comment section. So that will bring a wrap to the analysis. If you stay to the end and you get to subscribe to the channel, I don't know, just you're getting all of this for free. So just click on the subscribe button. Yes, click on it. And also like the video and share with your friends. Share with your friends. Don't enjoy all the money alone. All right, bye for now. Cheers and have a profitable week ahead. Thank you.